Hi, everybody. George Fokas from Focus Beyond in the Raw. I'm in a t-shirt. The purpose of this is to show you results, prove to you what I'm generating in a couple of my accounts and an account that my son and I are in. He's 16 years old, and I've given him permission to trade with me so I can share with you the actual results of what he's generated. You've seen some videos. You've probably seen some videos on social media, on YouTube, on Facebook, wherever it is, on email, of some trades that I've gone into. Now I want to show you the exit. What happened to those trades? How did they perform? What ended up happening at the end, George? So very, very important. If you really want to learn and you really want to know how money is made, instead of you working for money, how to make money work for you, sit and watch this. It'll help you and you'll get to understand and see what we're generating. And that's what it's about. It's not about me now making you laugh, making you feel good. The purpose of me doing this is I just want to prove to you that if you're willing to put some time in and educate yourself, you can make your money work for you. A lot of people are asset rich, but cash flow poor. How do we change that? How do we get you cash flow rich? So many people right now are sick and tired of being sick and tired. They're working for their money. Society has taught us all our lives, and I'm pretty sure you all agree, when we went to school, we were never taught how to make money work for us. We were taught to work for money, how to be a slave to the system. So how do we change that? Because society has taught us that we work for our money, time and effort in for a return, a reward on your time. But when do you see that, folks? You see it at the end. You've got to work before you get paid. Now, you work hard for your money. A lot of people have said, George, I've saved some money. I'm too scared to invest it. I don't know what to do with it, so I'm just going to put it into the bank. Now, if you put your money into the bank and you lock it up into a term deposit, when do you see your return on that money? At the end. Some people have gone into property as investments, but when do most people see a return off those properties? At the end, once the property's either paid off or they pay the bank off or they sell it for a capital gain. A lot of people are looking at the markets, and let me tell you something. You go into the markets, when do most people see a return from the markets? At the end. What differentiates me to everybody else? What makes me different to everybody else? Well, I teach my students over 18 years how to see their return, their income, their cash flow, their profit paid into their account from day one, and I'll share it with you today. A lot of people say, George, that's a big statement to make, but listen, figures tell facts. I'll share with you my statement. You'll see the figures, you'll see the facts there. I can't make it up. But what I ask of you is this: give me the opportunity. I want you to be skeptical. You don't know me. I don't know you. Just don't be cynical. There's a difference. So give me the time. I'm going to click some buttons. I'm going to bring up some screens, and you're going to see my trading account. Now, I've blocked out some figures as normal, but very, very important. Let me show you as of today. Today is Friday, the 5th of April. I'm coming to you from my home office. I'm in Sydney. It is raining outside, so I thought, what else can I do? I've picked up the kids from school. So you know what? Let's do a video. Let's share the results with people. It's Friday afternoon. Most people have had a hard week of work, even though it's a short week because of Easter Monday. But people are now probably going out drinking and partying and doing all that sort of stuff to drain their sorrows of the week. See, I did things differently when I was working in a job many, many years ago, nearly 30 years ago. I didn't drain my sorrows. Friday afternoon, I was back at home. I was studying. My head was in those books. My head was in those programs, learning how to make my money work for me. And this is where I am today because of it. But most people are right now, Friday afternoon, probably at the pub drinking or going out and doing all that sort of stuff, trying to feel good, have that temporary feel good. But the reality is they're going to blow their money. Come Monday, they're back in the rat race. But what are you going to do different to see something different? Do today what others don't. Please listen to this and write it down. I would encourage you to write this down. Here is a distinction that I give my students that I want to give you right now. Actually, I don't usually, but I'm going to give it to you. Do today what others don't to have tomorrow what others won't. What you're doing right now, watching me, most people won't. But I do it anyway, because if I can change one person's life, I've done something, right? And that's what it's about. That's why I do what I do. I want to help people. I want to see people grow. And those people who know me well know that the purpose for me is to see them succeed. And I want to see you succeed. And this is why I do this. Now, whether you take action or not is up to you, but it's purely educational here. I just want to share with you the figures and the results. What you do with it is up to you. Whether you want to make your money work for you or not, that is up to you. So let me share this with you. I'm just going to share screen. I'm going to bring up the screen. You're going to get a blank white page first and foremost, because I don't want to do any fancy titles or anything like that. I do want to go through a disclaimer, and what this disclaimer says is this: I don't know each and every one of you. I don't know who's watching this, so I don't know your personal circumstances. There's no personal advice. This is what we call general advice only. It's actually educational purposes. So I am licensed under an Australian Financial Services license, but it is educational purposes. It's just sharing with you my results of what I've done. Now, they do say, past results can't predict future results, and that is true. But what I can tell you is this: if you do nothing today, you're not going to see nothing tomorrow. Do today what others don't to have tomorrow what others won't. So with your permission, let me continue. Here is one of my trading accounts. I have blanked out some of the information. As you can see, the date of when I took this screenshot was 1:39 this afternoon. It is Friday, the 5th of April. You may see this on the 5th of April. You may see it a week later or 2 weeks later or a year later. But the figures tell facts. Whether it's you see it today or you see it in a year, it doesn't make a difference. These are the results of what we've made purely by taking action and purely by believing in ourselves to make our money work for us instead of us working for money. So there's some figures on the screen. I'm going to bring up some numbers to make it easy for you. Number one, have a look at this. On the 20th of March, so look at these dates, 20th of March. Now, I'm going to be a bit small on your screen because the main screen is my trading statement, but I will later on come back, but just follow through with me on this. You can see the date and the time that this order went into the market. Now, this is the US market because it is the biggest market in the world. I am based in Australia. Doesn't matter where you are around the world. We can all invest in the US market. It is the biggest market, pays the best returns, and that's where we have to be. On the 20th of March, 2024, I put an order in. You can see the time. I put an order in to buy a stock. So I'm following a system and a process that I've been following for 24 years and the one that I've been teaching to my students all around the world for over 18 years. I've educated and spoken to over 50,000 people all around the world over 18 years, and it's all about helping people grow. But the biggest thing people need to realize, and you need to realize, is slow and steady wins the race. This is not a sprint sport. There is no overnight success. You're not going to place a trade and become a millionaire today, tomorrow, in a month's time, or in a year's time. That's not going to happen. I know there are people out there who say, George, give me a tip. What's a hot tip so I can put my money in and make money? I say, you're an idiot. Walk away. I don't want to talk to you. And it's reality, because you need to realize and understand, folks, and please don't take this the wrong way. I'm not here to be your friend. I'm not here to be your friend. I'm here to help you, coach you, and mentor you. I'm here to push your boundaries. I'm here to be real with you. But you've got to be in it to win it. Otherwise, what you did last year and you're doing this year, nothing's going to change. You've got to get out of your comfort zone. You've got to take on some risk. You need to understand what the risks are, because you don't want to go blindly in with not understanding the risks, but you need to understand risk to get a return and a reward. And that's very, very important. So have a look at this. Number one, the date that I got in with the time. Number two, the stock that I bought, I paid $43.18 for it. You can see number two, $43.18, what I bought the stock for. So let's go to number three. So this is the contract that I put on that stock. So I bought some stock and then I put a contract on that stock. And follow through with me. It'll make more sense as we go along, especially for those of you who have never heard about this. On the 20th of March, I bought a stock. And on the 20th of March, at the same time, I've put a contract on that stock. And if you go to number four, the contract has an expiry date on the 28th of March. And the contract has an agreed price. Now listen to this. This contract that I create has two factors. It has an expiry date and it has an agreed price, what we call a strike price, that it needs to be acted on. And that strike price is 43. So what's happening is this. On the 20th of March, I buy a stock and I'm saying to the markets, I'm happy to sell it on or before the 28th for 43. I'm buying it for 43.18 and I'm agreeing to sell it for 43. Don't get too technical right now. Just follow through with me. I'll explain more as we go along. It will make more sense. So I'm buying it for 43.18. I'm agreeing to sell it at 43. Now, I'm agreeing to sell it to someone in the marketplace, someone that's in the stock market and in the marketplace. The person who wants to buy my stock for $43 but doesn't want to buy it today on the 20th wants to buy it on or before the 28th. So there's someone in the market that says, I want to buy that stock. I don't want to buy it today. I want to lock it in today at today's price thereabouts, but I will buy it at a future date, being the 28th. That person who wants to buy my stock has to pay what we call a premium to lock this agreement in place. So as you can see, number five, the premium that they paid me was $1.48. So now, if you can see what's on the whiteboard, listen to this. I buy a stock on the 20th of March for $43.18. And on the 20th of March, I do a contract that says I'm agreeing to sell it on the 28th. So 8 days later, I'm agreeing to sell it for 43. And the person who wants to buy it off me for 43 pays me $1.48 to have that right to buy it off me at 43 in 8 days' time. So there's someone in the market saying, I'm happy to pay $43 in 8 days' time. Why? Because they believe the stock in the next 8 days is going to do what? Go up. But they want to lock the price in today at 43, but not buy it today. But to have this agreement in place, they pay what we call a premium of $1.48. So $1.48 gets paid for this contract. And because I've created this contract, guess who takes the $1.48? So What I need you to understand is this. You've outlaid 43.18 into the market. You've put your capital into the market, and immediately the market's giving you back $1.48. So if you outlay 43 and you get back $1.48, what's your cost? So 43.18 minus $1.48 equals 41.70. I'm just using a calculator. So your cost is 41.70. Let me ask you this. How many of you would like to learn how to go into the markets and buy a stock at a discount price of 41.70, which is what our banks and stockbrokers pay, while everybody else pays retail at 43.18, which is what they're buying it off from their broker off the board? How many of you would like to go into the markets and buy a stock for 41.70 while everybody else pays 43.18, but you pay 41.70 for a stock that's trading at 43.18? Have you received, now listen to this question very carefully, have you received a return on your investment from day one? And the answer is yes. Do you need this stock or the markets to move for you to make a return? And the answer is no, because you've made your return no matter what happens. Think about your next door neighbor who buys the same stock as you for 43.18. What are they hoping that stock does in the next 8 days? But what are we hoping it does? Who cares? But hold on a second. Do not go out and just buy any stock just for the sake of trying to make a buck off it. Because do you agree there are good companies to invest in, but there's also shit companies to invest in? And do not put your money into a strategy unless you know exactly what you're doing. Over 24 years, I've been implementing this strategy. Over 18 years, I've been teaching this strategy, making sure that every single one of my students all around the world follows a checklist and does their due diligence. And they understand the education that I teach to be able to pick the right stocks. Now, even if we pick the right stock, whatever happens in the markets, the stock's going to follow. So what you need to understand is this. We do not know what that stock is going to do. It could go up over the next 8 days. It could go down over the next 8 days. We can't control it. But how many people are in the markets right now trying to predict what the markets are going to do in the future? A hell of a lot. How many Australians and people around the world are sitting on shares, a parcel of shares right now, doing nothing with them, hoping and praying that they go up? But imagine if they learned how to start implementing another strategy to give them cash flow and income while they're sitting on those stocks, because they've already got money in the market. So you've received $1.48 on a 43.18 investment from day one. Over the next 8 days, whatever we do, we've made some money. But we now need to wait for the next 8 days to see what that stock's going to do, because our contract says we agree to sell our stock in 8 days at $43 should the stock stay at 43 or higher. So the contract says at the end of the month or at the end of the 8 days, if the stock is 43 or higher, we agree, we have the obligation to sell the stock. But if the stock doesn't go up and it goes down below 43, then that contract negates and there's no deal and we don't sell the stock. We keep the stock. But do we also keep what we made from day one? And the answer is yes, no matter what. That's our income. That's our cash flow. So are we in the markets trying to predict what they're going to do, or do we want cash flow from the markets? I want to teach you cash flow, because you can't eat capital gain, but you can eat cash flow. So over the next 8 days, whatever the market does, I've made a return. Now, guess what happens? In 8 days, go to number 6. Number 6, 8 days later, on the 29th. So the contract's on the 28th, which was Easter Thursday. So on the 29th, Easter Friday, while the markets are closed, the stock market is now doing its calculations and working out what's happened in the markets. I sell the stock for $43. So the stock gets sold for $43, right? So the stock gets sold for $43 in 8 days. Now, my cost is $41.70. I sold it for $43. So what's the difference between $41.70 and $43? Is $1.30. That is the income net that I have made. $1.30. $1.30, divide that by the investment of 43.18 as a percent is a 3% return of what I've made for 8 days. How many of you would like a 3% return paid into your account from day one for 8 days, and whatever 8 days happens over the markets, over the 8 days, you've made money? Because this is one trade that I did from the 20th of March to the 28th of March last week. Today's the 5th of April. Now, whether you watch this today or you watch it in a week or in a month or in a year's time, we've been doing this for over 18 years. I've been doing it for over 24 years. It's all about cash flow, folks. This is what you need to understand. So here is a trading account that my son is 16. So please understand, you have to be 21 and over to trade in the US markets and in the markets. But my son is 16 and I'm teaching him, and I've given him permission to sit with me and click the buttons and learn the process, because I want to teach him, because I've given him permission. I want him to learn the process, so when he is 21, he is able to do this on his own, and he's learned and he hasn't wasted time. Because the biggest thing people say is, I will do this later. How much time have you wasted from now until later, where you could have done it now and seen a different result later? So I've been teaching my son for the last couple of years. He now sits with me and we click the buttons together and we go through the process. 16 years old, he is learning how to make money work for him. Very, very important. We teach our kids to learn how to make money, because none of us were ever taught at school how money works for us. We were taught to work for money, to be a slave to the system. So have a look now on your screen. Here's a couple of trades that he did with me. Now let's have a look. Number one, on the 23rd of February 2024, you can see number one, the time and the date. He bought a stock for 45.35 with me, 45.35. So he's bought a stock with me, 45.35. Let's go to number three. We've done a contract which expires. So go to number three and have a look. It expires on the 1st of March. And we've done a contract at 45.5, 45.50. That's the contract. You can look at number four. You can see the date. So you look at 4 and look at 1. You can see the date and the time is exactly the same. So we've bought the stock and we've made money at the same time. How much money did we receive? 91 cents. 91 cents. So we've made 91 cents from the 23rd of February to the 1st of March. And we're saying that if the stock by the 1st of March is at 45.50 or higher, we agree to sell it and get back 45.50. But if it doesn't, no matter what, we still make the 91 cents and we keep the stock and we can go back into the market and repeat the process. Now, a lot of people say, but George, what if the stock goes down? What if you buy the stock at 45 and it goes to 30, it goes to 20, it goes to 40? Well, what if? It can happen. But when you have every piece of the puzzle, because you're following a process and a checklist that I've been applying and I've been teaching for over 18 years all around the world, you know exactly what to do and how to do it to evaluate your position, to know what process to apply. Because there are times, and there will be, and you need to understand this, there are going to be opportunities and moments where stocks go up and when stocks go down. And right now, I can tell you that next week the markets will go down, and you watch the media, you watch what's in the papers, you watch the news. The US market will go down and everyone's going to talk about it. Oh my God, 16 billion wiped out of the markets. Look at this stock. It was worth this. It's lost this much value. And look how much fear is going to put into the uneducated. But the educated know there is opportunities right now that we can make money out of. Not from directional trading, from whatever the market is doing, whether it's going up or down, we can make money. And I'm about to share it with you and show you. So I bought the stock with my son 23rd of February up until the 1st of March, right? What happened on the 1st of March with that stock? Go to number 6 on the screen. The contract expired, EP. So where did the stock close at on the 1st of March? The stock closed at 44.84. Stocks closed at 44.84. Is that lower than 45.50? Yes, it is. So guess what? The contract negates, expires worthless. The person in the market who's holding that contract walks away from that deal. No deal. So what do we do now? We go back into the market and we evaluate the position, follow the checklist, follow the due diligence that I teach in my education to all my students around the world. And we go back in and evaluate the process. Now, in fact, my son and I, we didn't do anything for 7 days. Go to number 7. Go to number 7 on your screen. So on the 7th of March, so realistically a week later, close to a week later, on the 7th of March, we now go back in to do another contract. So we do a contract on the 7th of March when the stock is now 44.12. So the stock's at 44.12 on the 7th of March. We bought it for 45.35. Stock's at 44.12, but on the 7th of March, excuse me, we go in and we do a contract. Bear with me, I just choked. Up until the 15th of March. And the contract is another 45.50 contract. So we do a contract for 45.50 while the stock's at 44.12. How much do we receive? 66 cents. So how much do we receive? 66 cents. So we receive 66 cents. The stock's at 44.12. We do a contract at 45.50. we receive 66 cents. Now, have a look at this. We've done a contract from the 7th of March to the 15th of March. What happens on the 15th of March? Go to number 10. The contract expires, EP, which means what? The stock's closed below the contract price. Where did the stock close at on the 15th of March? 43.62. Stock closes at 43.62. Okay, stock's gone down. We bought it for 45. It's now 43.62. What do we do? So realistically here, there's basically a week of nothing. We've just sat on that stock, no income, no contract. We just sat on it. That's okay. We still made some money originally. So what happens now? Go to number 11. Now on the 20th of March, so 15th is when the contract expires. On the 20th of March, we go back into the markets. We create a contract. What's the price of the stock on the 20th of March? The price of the stock on the 20th of March is 45.98. But we decide to do a contract at 45.50. So now we do a contract. Go to number 12, which expires on the 28th of March for 45.50. That's the contract. So we've done another contract for 8 days. How much do they pay us? 38 cents. So what you need to understand is this. Every time you do a contract, you're not going to earn the same amount of money. But something is better than nothing. We earned 91 cents. We earned 66 cents. We earned 38 cents. That's income while the market has been going down and then up. While the stock's going down and up. We can't control that, but at least we're getting cash flow on our investment. Because think about how many people in the market would buy a stock, it goes down, they panic and they sell. Or some sit on it and hope and pray that it goes back up. But while you're waiting, imagine if you had some cash flow banked into your bank account. So let's work this out. Bought it for 45.35. We received 91 cents. So minus the 91 cents, minus the 66 cents, and minus the 38 cents, we have a cost of 43.40. 43.40. Now, understand this. Even if I hold this stock for the next 5 years, if I'm earning income every time I do a contract, over the next 3 to 5 years, this income will overpower my investment. And most times we get 100% return on investment, even if a stock goes down, as long as we're earning income. Just like, as an example, if we bought a $20 stock and that $20 stock goes to $15 and stays at 15, if on average you're earning $1 income, 20 months later, let's say if you're doing that on a monthly basis, 20 months later, even if the stock stays at 15, you've got 100% return on investment, even if it was 40 months later, even if it was 60 months later. But the average person who bought that $20 stock and it goes to 15 and never comes back up, 20 months later, 40 months later, 60 months later, they're still hoping and praying that it goes up, but you've got your money back because you know how to apply a system that's going to give you cash flow. So let's work this out. I bought it for 45.35, got 91, got 66, got 38, but our cost is 43.40. So my son's looking at this and going, okay, 43.40. We had a contract at 45.50. At the end of the 28th of March last week, that contract is assigned and closed. Stocks closed at 47.88. So realistically, we get back the contract price of 45.50. So my son and I have made a profit of $2.10 in this account. $2.10 divided by the investment of 45.35 as a percent is a 4.6% return. From the 23rd of February to the 28th of March is 6 weeks. Basically 34 days. How many of you would like to see a 4.6% return, 4.6 in 6 weeks, while the markets are up and down and all you're doing is clicking some buttons on a computer and you're creating these contracts because you know exactly what to do because you're following a process and a system and your money's working for you? Would that be okay? So here is another trade, and as you can see on your screen on the 29th, so the contract was on the 28th, it was Easter Thursday, so nothing happens on the markets. On the 29th, Good Friday, even though the markets were closed, the market is analyzing what they need to do, and the stock is sold on the 29th at 45.50. So let me just share with you a trade my son is currently in as of today, the 5th of April, which actually the contract expires today. So whatever the stock does or the market does tonight, he still made some money with me. So let me share this with you. Go to number 17 on your screen. On the 29th of March, my son's gone in and I, $28.43. $28.43. We bought this stock. Now, 19, you can see 17 and 19. The date and the time is exactly the same. We've done a contract which expires So you can see, go to number 20. It expires on the 5th of April. And we've done a $28.50 contract. And that's paid us 68 cents. So realistically, from the 29th to the 5th, Friday to Friday, 7 days. So for 7 days, 68 cents is the income that we've made. Divide that by the 28.43 as a percent is a 2.39% return, 2.39% return for a week. Now, that is last Friday, the 29th, when the order went in, till the 5th of April. What I want you to understand is this. The 29th, because that order went in on the 28th, going into the 29th. So on the 29th, public holiday, that's a public holiday, Easter Friday. Saturday, Sunday, and then we got 5 other days, Monday to Friday. So from Friday to Friday, with 3 days off where the markets aren't trading, Easter Friday, Saturday and Sunday, realistically, for 5 days, my son and I have made 2.39%. Even if you say 7 days, Friday to Friday, even if you say 8 days, how many of you would be okay with a 2.39% on your money, however much money you want to invest? 2.39%. Now, it doesn't mean we do that every week. You may do 2% this week. You may do 1% next week. You may do nothing for the rest of the month. You may do 1% next month only. But something is better than nothing because you are in control of your money. Because I want you to ask yourself this. If you put your money into the bank right now, whether you're in the US, whether you're in Europe, whether you're in Australia, wherever you are, if you put your money into the bank, what's the bank going to pay you in interest? And when are you going to see that money? At the end, in 12 months. But we've seen that from day one up front in our account. We're in control of that because we've learned how to control our money. We are not guessing what the markets are going to do because we don't know what the markets are going to do. We are putting our money into an investment because we know that the investment's going to go up and down, but we want cash flow because cash is king. Can I share with you a trade I placed today, this morning, in my bank, in another trading account? So this is a trade that went in at 5:55 this morning, Sydney time, on the 5th of April and 51 seconds. So number 1, you can see the time. Number 2, BOT is the stock that we bought, that I bought, 34.74. Have a look at this, 34.74. And then let's go to number 4. I've done a contract which expires on the 12th of April, April the 12th. So today is what, the 5th of April, up until the 12th of April. You can work out how many days that is. I sold a contract which expires on with a contract price of 35. I bought it for 34.74, contract at 35, and it paid me 59 cents. I made 59 cents. You can all see it on your screen. I'm going to stop sharing screen for a second because I want to come over to the big board. I just want you to see those figures. 34.74 is what I paid. I've got a contract till next Friday at 35, and I received 59 cents. And hopefully you're all okay with that. Let's stop sharing screen. Come over to the whiteboard. I want you to see the bigger picture. When you're in the stock market in the US, you have to buy a minimum of 100 shares. So to do a trade, you need a minimum of 100 shares. 3,474 would be your investment, US dollars. So $34 stock, you can't buy 10 of these shares or 20 or 50 or 49. You have to buy in lots of hundreds, 100, 200, 300, and so on. So 3,474 is your minimum investment. So let's say you put 3,474 as your minimum investment, 59 cents times 100 shares, you're making $59. You're making $59, right? But let me show you net after expenses. The brokerage fees that we pay is $15 to buy the stock US and $10 to create the contract. So 15 and 10 is 25. So 59 minus 25, because I want to show you net. What are we left with? 34. So you're making $34 on a 3,400 investment for the next 7 days, 1 week. Now, a lot of you would look at that and go, $34, it's not a lot of money. No, it's not. But something is better than nothing. And I'm pretty sure most of you don't have that in your bank account working for you right now. Because I want to ask you this question. Where else could you put $3,474? If you have $3.5 grand now, where would you put it? Where would you put it to work for you? You can't even put it into the bank because the bank will give you 0 interest. So what else do you do with it? Whereas I can show you how to make at least $34 for a week. It's better than nothing, isn't it? I need 10 minutes of your time for me to teach you how to do these 10 buttons that you will click with 10 minutes of your time, and you've made a return on investment. That's how long it takes. Could you give me 10 minutes of your time for me to show you and my team to show you which 10 buttons to click as part of the education that you will learn to start making your money work for you? Now, realistically, when you work this out, $34 on a $3.5 grand investment is about 1% return for a week. If it's 1% a week, if you look at the potential there over the next 4 weeks, what's your return over the month, right? That's your potential. So, but I want you to remember these figures. I want to talk bigger picture. I want to talk hypothetically with you. Let's talk outside the square, outside the box. Let's talk hypothetically. Remember the figure of 34.74 and remember the 59 cents that we received, that I received, not you. I've received them for a week, 5th to the 12th. So 34.74. Now, I love property. I'm heavily invested in property. I love property. But you either work for your money or you make your money work for you. You then can use your money to go into property deals if you want to do that. So remember the price of 34. Now let's just talk property for a second. Let's say you had $350,000. Let's say you've saved it or you've got it in your super, you've saved it, you've got 350 grand. Now I'm talking hypothetically now, right? But we're just going to think outside the square. We're just going to look at some figures. If you had 350 grand, what would you do with it? Most people would say, George, I'd pay down my home loan, put it in an offset. If you put it in an offset, and your interest rate is 5% or 6% a year, you're only saving 6% a year, right? So some people say, George, I'd go and buy an investment property. Great, you go and buy an investment property. Now, let's say you bought an investment property worth $1 million. Now, again, I'm talking hypothetically. I'm just going to use some figures. You're probably going to agree or disagree, and that's okay. We're just using some round, easy numbers. You bought a property for $1 million with your 350, so 280% LVR. So you get a loan. The bank gives you 80%. Say the house is worth $1 million. The bank gives you 800 grand. You need to come up with 200 grand, the difference. So there's your 200 grand. The other 150 is your legals and stamp duties and all that sort of stuff. So you buy $1 million house in a suburb somewhere in, let's just talk Australia. For the rest of you around the world, work it out, think about it. Let's just talk Australia here for a second. If we put $1 million into a property market here in Australia and we started renting that property out, let's just say we get $1,000 a week rent. Now, I know a lot of you would say, no way, George, it's not possible. There might be some areas in Perth, maybe you might get 1,000, but the rent that you'll get on $1 million, 750, 800, 850. Yeah, look, I agree. But let's just say, keep the numbers easy. Let's say $1,000 a week. That'd be, on average, about 4,000 a month. Right? So you got 350 grand. You buy your property for $1 million. You're leveraged. You get a loan. You're leveraging. You got $1 million property with your 350. You're making 4 grand a month. Fantastic. So let's go back to my figures, for example, 34.74 and 59 cents. Remember those two figures. The trade that I did today, 5th of April, 34.74 and 59 cents. So 34.74 and 59 cents. Now, if I buy 100 shares, the investment would be 3,474. Now, that's what you would start with as a minimum. Now, some of you might go, George, I've got equity in my property. I might be able to get a loan. That's great. If you want to think about it that way, you could. Some of my students do. Right? If you bought 200 shares, it would be about 7 grand, 300 shares, so on and so on. If you bought 10,000 shares, it would be $347,400. So I just want to compare dollar for dollar roughly against property, just to give you this example and this scenario. 350 in the property market, basically 350 in the US market. Now, this is US dollars, but even if we convert it back to Australian dollars to compare, let's just say we're doing it that way, just for this example and exercise. So we're making 59 cents. We have 10,000 shares, 59 cents, 10,000 shares. Now, some of you might go, George, would you put all that money into the one trade? I'm just giving you this as an example. 59 cents times 10,000 shares is $5,900. $5,900. Now, we've got to take the brokerage out. We've got to take expenses out. So the brokerage in this scenario on average is about $400. But let's just make it $900. So we'd have to pay the broker to do the trade. It is about 400. I'm going to say 900. So what are we left with? If we take out the brokerage, we've earned the income of 5,000. So it's 59 cents, but we've got 10,000 shares. So that's where the 350 grand goes in because we've got 10,000 shares. So 59 cents times the 10,000 shares, 5,900. Take out the 900 brokerage. What are we left with? So let's compare. Your property is going to pay you 4 grand a month. But I've just earned, if I use my figures, if I do it with 10,000 shares, I've just earned in this scenario, my property pays me 4 grand a month, but I've made 5,000 in a week, 1 week, 7 days. What do you prefer? Because over here, we haven't taken expenses out. Now, we're not going to talk about tax because tax, I'm not licensed to talk about tax. But what you need to understand is this, depends on how you structure yourself, right? But let me ask you this. First, we need to understand the cash flow. Would you be okay with 5 grand on a 350 grand investment? Now, it doesn't mean next week you're going to make another 5 grand. You may only do 2 grand next week. The week after that, you may do nothing. And the week after that, you may make about 1,000, but you may make 7. See, I don't know. But all I know now, with my trade for a week, 5 grand. Would you be okay with that if it was 350 grand? Now, 350 grand for a lot of people is a lot of money. But you could start with 3,474. You'd make $59, take out the brokerage of 25, you're making 34, you're making 1%. That's 1% in your pocket for 10 minutes of your time to click some buttons to make your money work for you. That 1% you didn't even have. So do you understand? Do you want to make your money work for you? But the biggest thing you need to realize, folks, is this. Over here, you've got a loan. So the 4 grand that you're getting from the rent has to pay the loan off. So the reality is you're left with nothing, the inside of a donut. You've got to keep working to service the loan. But if you put the 350 instead of in the property, I'm not saying to do this, I'm just talking hypothetically outside the square. If you put the 350 into the stock market, now, yes, you need to make sure you're comfortable to put your 350 into the stock market and you're happy with that trade, right, which is the trade that I did, you'd have 5 grand in your pocket for a week, physical cash, compared to the 4 grand that you'd make a month that you'd have to give to the bank to pay the loan off that you're left with nothing. So do you see the difference? So the biggest thing you need to understand is this, folks. You've got to be in it to win it. It's not a sprint sport. Slow and steady wins the race. Because for me, it's about showing figures. Now, okay, I've shown big figures here, but they're still real. Whether you put 3 grand, 30 grand, or 300 grand, the result's the same. The more zeros you put in, the more zeros you pull out. Okay? And that's what you need to understand, folks. How many people are sitting on shares right now doing nothing where they're missing out on cash flow? Because they don't understand how this strategy works. And one more time, this stock that I'm in right now, that I got in today, over the next 7 days could go up, but most likely will go down because the markets most likely over the next week or so are going to go down. But do I care? No, because my strategy is all about give me cash flow. My strategy is not about trying to predict what that stock's going to do. Because when you buy a property, are you buying it because you want to see what it's going to do in the short to medium term, or are you buying it to at least rent it out and get an income, to get someone in that property to give you an income? Now, this has nothing to do with property, but I'm just giving you these 2 different scenarios because these are 2 different vehicles. You put your money in this vehicle is property. You put your money in this vehicle is stock market. This vehicle gives you cash flow, but you get it at the end. Once you've sold it for a profit or once you paid the bank off, this gives you cash flow from day one. And then what can you do with that cash flow? The choice is yours. If you want to know more, remember I said I'll run a 4-hour masterclass. You've got to watch it if you really want to know how to make your money work for you. You've got to be in it to win it. The stock market is not a sprint sport. There is no such thing as overnight success. Slow and steady wins the race. It is a 3 to 5 year plan. Are you willing to put 3 to 5 years in to build that pipeline that will feed you for the rest of your life, to leave a legacy that your kids will look back and go, he stepped up, he believed in himself, and he built this legacy for us. He or she. Forgive me for just saying he, right? He or she, whoever it is. But what you need to realize is this, folks. If you do nothing, nothing changes. I can sit and show you my students' trading statements from last year, 2023, what they did from January to December for a year. I can show you my students' trading statements from January to April, right now, end of March, 3 months. But if you don't do anything, nothing changes for you. The choice is yours. You can click on the link, watch my masterclass, and learn what this strategy is all about and where I come from. Or you can do nothing and nothing changes. People say to me, why do you do this, George? Because I want to see people succeed. I want to see people succeed. Those who know me well know that what I do and the time and the effort that I put in to help them grow, that's what it's about. There's enough money in this world for all of us to be successful. But you need to understand, you know the saying, you can lead a horse to water, but you can't make it drink, right? I want to see you succeed. I believe in you more than you believe in you. And I don't even know you. Why? Because if you follow a process and a system that I've been following for 24 years, I can tell you one thing. There's money to be made from day one if you want it, right? The choice is yours. Do you want to learn it? Do you want to understand it? Or do you want to do nothing and nothing changes? All you need to do is go to my website, focusbeyond.com, click on my masterclass, register, watch the masterclass, 4 hours. People go, 4 hours, George, that's a long time. And I say, you know what? How many people sit on Netflix and they look back and they go, 4 hours? I'll do one more episode, right? So it's up to you. It's up to you. If you really want success, if it's a must, you'll make it a priority. If not, you'll come up with excuses. And a lot of people do. And that's why they say, why is the minority wealthy and the majority aren't? Because the majority, their excuses are bigger than their dreams. What you need to do is you need to let go of what's in here to manifest what's in here. I'm George Fokas. Thank you very much. Hopefully I get to see you in my community. Hopefully I get to answer any questions. Shoot me a message. Challenge me. Ask me questions. Don't just take my word for it, right? Ask me questions about the strategy. I'm happy to help you. But don't expect me to give you the answers in regards to how to do things, because my time is worth something. If you don't value me and then you don't value my time, then I can't help you. Thanks for watching. Take care, everybody. Click on the link, go to my masterclass, watch, and let me help you make some money. Bye, everybody. Enjoy your weekend. It's Friday afternoon. By the time you see this, might be Friday night, might be the weekend. Take care, and hopefully I get to see you in our community. Bye, everybody.